on ET Now, and let's put the spotlight on the textile space because that sector is believed to be hit the hardest with respect to the tariff that has been slapped at 50% on India. But what's really happening within the sector right now? Let's try to decode that. We are being joined by Mr. Sivaramakrishnan Ganapati, Vice Chairman and Managing Director of Gokuldas Exports. Hi, very good morning and thank you so much for your time. And firstly, help us understand what is the current situation right now. 50% tariff that has taken place. But before that, what sort of front loading that we have seen and what is the current situation? Are we seeing some bit of a purchases that is seen a bit of a slowdown? Are they taken aback?
So, obviously, what is impacted is the US side of business. Gokuldas is more diversified. We have manufacturing operations in India and Africa. Africa is not impacted. Out of Indian operations, the business that is impacted is what goes towards the US. And at the moment, we do have our order book full till Q3. Having said all of this, the tariff will impact of future order flows. We are in discussion with our customers to see how do we mitigate some of their problems. So there are many options that we are looking to mitigate. But I think in the longer run, if the tariff continues, it's going to be hard to defend the business unless we, see a portion of this tariff go away or some relief coming in. But as a company, we are trying to take all kinds of internal maneuvers to make sure that we manage the business flows through the company during these challenging times.
Mr. Ganapati, morning firstly, would you have any numbers over there? Because India had been very steadily gaining textile market share in the US over the last 5 years. How big a setback could this 50% tariff cause?
See, at 50% tariff, there is, virtually, it doesn't make any sense to do business, right? For any country or any large retailer, especially when they have an option to buy from neighboring countries where the tariff is 20%. So Bangladesh, Sri Lanka, Vietnam, all of them are in that 20%. Indonesia, all of them are in that region, 20%. So there is a tariff arbitrage which is available, and brands or retailers will exercise that arbitrage option and try to source over a period of time from those regions as well. So how big is a hit? The US business will come considerably down unless somebody is looking for a very specific India-centric product, etc. But at 50% tariff, that will be a very minuscule part of the business. So net, I would think that in the long run, this 50% is not healthy for US-based exports. India, of course, has got an FTA with UK and should look at other markets. But in the meanwhile, I think US market business, which was growing hitherto and growing very steadily over the years, will take a nosedive at the moment if it continues. That is.
But Mr. Ganapati, US has other options like Vietnam, Indonesia, Bangladesh, which have been facing much lower tariffs. You did talk about UK. What are the other market options for India and exporters such as you?
Europe, Japan, some of these are larger markets, and those are options, of course. But then, it's not easy to pivot overnight. US is a very, very large market, as big as Europe, and it's a market which has grown pretty substantially for India, and it's a good market for the world. So to pivot out of that will take time. In the interim, we have to deal with the tariff that has come our way.
But along with that, Mr. Ganapati, what we understand is that with import duty exemption on the cotton now that has been extended till December 2025, how much relief does it provide to the input cost? Give us some sense there.
So marginally, so it's only, US cotton, there are specific types of cotton, and that import duty exemption, can keep a little bit of a check on Indian cotton prices. And the impact of that on fabric is not much. And anyway, for us, the raw material prices are by and large a pass-through. So from an apparel export standpoint, it is not much. Unless, US follows through on a US cotton, tariff rebate. There was a move to offer some tariff rebate if the underlying fabric contains US cotton. It has not come through as yet, but if it does, then, to that extent, it may benefit slightly. But, those are all things to be seen in the future.
So what kind of a financial impact, Mr. Ganapati, would this have? I mean, I know you did talk about Japan, UK and Europe, and that opening or diverting exports to those markets will take time. But what does it mean for your financials, for instance?
So the aim at the moment is to preserve the business, right? Preserve the order flow, preserve business continuity. And that's what we're exactly doing at the moment. And in that bargain, if the margins take a hit, we may allow it for a short term in the interim, for a quarter or two. But primarily the purpose is to hold the business, not let the business move out of the country, and continue to have that stranglehold over the business. So that's what we're doing. It may not hit the top line much. It may hit it partly, but we may have a margin compression for now. But I think that's a price that we may have to pay to give some relief to the US based buyers who will be hit by the additional tariff. Remember, we supply FOB, so the tariff burden is initially picked up by the customers. So we may have to defray a portion of that. So that's a discussion that we are having in order to hold on the business within India. But again, this is all short term. In the long run, a 50% tariff will not work. We will have to either pivot out, or hopefully the tariff goes away. We'll have to see which one happens first.
All right, Mr. Ganapati, with this, we let you go on that. Thank you so much for taking the time out and speaking with us this morning.
Thank you.
But moving on, let's also welcome on board Mr. N. Tirukumuran, General Secretary of